Awesome. All right, everybody, we got Amit from Amit Investing here. Let's kind of dive into this. So Amit, maybe you want to give like an introduction, kind of how old you are, and talk about your investing journey, how you got started, and kind of what you focus on in your channel. And by the way, I'll put a link to Amit's channel in the description. I'll put a link to his Twitter as well. You guys should definitely follow him.
Hey, everybody. Thanks for having me on, Adam. Really appreciate being here. My name's Amit. I'm 24 years old. I've been investing unsuccessfly, really, for the past 2-3 years now. In the greatest bull market of our generation, I made $0. And we can talk about why. And yeah, I started investing 2019, senior year of college, just kind of dabbling into it. Actually, junior year of college, really understanding the market. And it was only until really the mid 2021 where I took like a keen focus of trying to figure out, okay, I want to make money in this. What is going on in this market? Trying to understand the fundamentals. And over the past year and a half, just been really learning about it. It's what inspired the YouTube channel, because I was like, all right, maybe I can share some thoughts. Maybe people can, create a community essentially around investing and around the stocks that I'm interested in. And it forces you to become a better investor if you have to constantly make content about it, because you can't sound like an idiot on the internet talking about this stuff. So yeah, that's why I'm here. I also have a startup. That's also why I started my channel, because I was like, all right, if we can get some attention on me, maybe we can get some attention on the startup. So we can talk about that later as well. And yeah, that's what I'm doing.
Yeah. So, I mean, when it comes to investing, that was actually one of my questions, because I've read about your startup. So definitely feel free to give it, kind of a plug if you're ready for that. But I mean, what is your ultimate goal when it comes to investing? Is it reaching financial freedom, or do you actually want to use the gains to fund the startup, or, like kind of what's the story there?
So top level right now, I have a consulting firm, and that's separate from my startup. That's how I make like my income. That consulting firm does take around 30 to 35 hours of my time per week. And I hate that, like, because I'm only getting paid for my time. It's just an exchange for, time for money. And it's getting annoying at this point. So part of starting the channel was if I could create a brand around finance and investing that was attractive to enough of an audience that cares about me and cares about my thoughts. That could be monetizable in a variety of different ways. And on top of that, actually making money in the market could be monetizable, because you're like making gains, which would allow me to quit my consulting job and go all in on my startup. Now, I am 24/7 on my startup, but when you have to, take some time to make money because you got to pay rent and all that stuff, then it's a lot more harder to think about your startup 24/7. So the really goal with investing and the brand that I'm building on YouTube and Twitter is to build a brand that allows me to not have to work at my consulting job anymore. And as a result of that, just go all in on the startup and hopefully generate some traffic for the startup, because the hard part about starting as a startup is no one cares that you have a startup. People
Right.
care about what they want to care about. So the question is, can you talk about something that is worth caring about? And there's a lot of things that exist, but are you good at talking about something that actually people care about? And to me, stocks and investing is a big community, and I'm actually passionate about it. And then as a result of that, the byproduct is they care about you, which means they can then care about your startup. In terms of gains from investing to fund the startup, that's not really the goal, because I'm not planning to sell for the next 7, 8, 10 years. We're in the process of trying to raise some funding for the startup right now, and that's hopefully going to actually allow us to start putting it into full throttle, and we'll see what happens.
Got it. Got it. Okay. Yep. Totally makes sense. So you had mentioned, you didn't really make a ton of money when you first started dabbling in investing. I'm gonna just take a guess. Maybe were you almost, too broad and just owned too much of different things, or, let's dig into that and then kind of zero in on, your. I mean, I obviously know what you focus on, but we'll focus on, kind of what you're big on now, and why, and I'll let you lead into that.
Yeah, I mean, I had zero strategy when I started in 2019, 2020. I bought Tesla at $180 pre-split. Right now it's like $5,400 or $4,900 pre-split. So that's like some 10,000% gain that I missed out on. And I sold it at $350. I made $150. And the reason I did that is because my friend told me, oh, you're up $150. You should sell it. I was like, you know what? $150 is a lot of money. I should sell it. It's like I had
Right.
no sense of what I was doing. It was the most stupidest thing ever, but it's what you got to go through I think when you're young and naive, no matter how much people tell you to like the fundamentals that have worked in the market, you're gonna think you're like this god that knows how to pick stocks and stuff, and it's just not gonna work. Another thing I made a mistake on is I did what you said, which is go broad on a bunch of things. Have like $1,000 in 7 stocks. It's like, well, at that point you might as well just buy an ETF, because you're not going to pick the 7 stocks that are going to be better than ETFs that have gone up 8% year over year over the past 100-something years. So for
Right.
example, I bought NIO, which is a Chinese electric car company, when it was $1. I just bought it because on Robinhood, I saw $1 stock. I was like, oh, I can own a share of a company for $1. NIO went up to $60 at one point. So I had
Yep.
around like 600-700 shares at like a $2-3 average, sold it at $6. Right. Like
Oh.
just idiotic stuff like that made no sense. So over time, I realized, wait a second, to build real wealth, you've got to consolidate capital around conviction stocks that you care about, because your mental health is going to be protected because you actually have picked a stock and you can deal with it going up and down because you picked it for a reason, not just because it was a shiny object on Robinhood. And then as a result of that, if you've got $20,000, $30,000 in a stock over the next 5-6 years, if you are right, then you're going to make a lot of money on the back end.
Right, right. Okay. So now let's hone in on Palantir, because I know you're constantly tweeting about it. I know that you're a shareholder. So let's get into why that became sort of your stock of choice or company of choice, and now we can start getting into Palantir specific questions.
Yeah, in 2017, I missed out on Shopify and AMD and some of the big names that were $17, $12, $23 at the time, right? And that was a big deal for me because I was using Shopify for like my own personal endeavors and not realizing the company that I was using had a public stock market price that was trading at a ridiculous valuation if you understood the potential of what a Shopify could be. Now it's at like $800 and it was at like $1,500 a couple months ago. So that experience of really missing out on those technology companies, when someone who's like a digital Gen Zer should know about those technology companies, really made me upset because I'm like, I had the money to invest in them and I just didn't pick those investments, not because I'm bad at investing, but because I didn't even know what investing was. So then as I got into 2021, I started researching technology companies and I was like, all right, I want to find the next Tesla, the next Shopify, next blah, 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 blah. That's a really hard thing to do, right? It's a really hard thing to pick stocks. I came across Palantir and I started buying shares of it. I knew nothing about Palantir, so going against my philosophy of actually buying stuff but I just bought it because I was like, it seems like it's big into tech. They talk about AI, they talk about machine learning, they talk about data analytics, and I'm like, well, the world is being run through data, so I guess it's a good bet to place. And then, I looked back at my portfolio over the next couple months and I was just like, I have this stock that's just sitting there that has $10,000 in it. And I'm like, well, 10,000 is a lot of money. I don't know why I have 10,000 in this stock. I should probably do some research. And the more I dug into it, I'm like, oh my God, this company could quite literally change the entire world in the next 5 years. Palantir is a company that essentially, in the most simplest of terms, they take data that exists within organizations throughout a variety of sectors, healthcare, blockchain, energy, media, all these types of verticals, and they take the data that doesn't exist in a centralized place. Data is all over the place. They put it in a centralized place, and they use the most advanced forms of artificial intelligence and machine learning to help individuals in that company understand what to do with that data. So the best way I like to describe it is Google takes the world's information and puts it in an indexable database that we can search, and then Google organizes and gives us the best result as a answer to our search query. Palantir does the exact same thing in individual organizations that have millions and millions of pieces of data that they need to be able to make sense of it. And when you really go deeper on how they do that, you realize there's a lot of potential there.
Right, exactly. I mean, when I think about Palantir, I think there's sort of like phases of data, to your point, that there's data is driving the world right now. And, I read a report that they think that, 80% of a large enterprise's data will be unstructured, meaning that it's in all these disparate, data silos or different systems that don't speak to each other. They're incongruent. And, when I think about what Palantir is doing, it's definitely similar to Google. It's kind of similar to like Amazon sort of figured out this problem that people didn't even realize existed yet in the early 2000s, right? And they thought, okay, data, as companies, acquire more customers, they're going to be solving more complex problems. And through that, they're going to be acquiring more data, and this data is going to become important. And so we need to get off of physical servers and start virtualizing everything, right? And so that was like kind of the birth of AWS. And that was what I call like data 1.0. And then data 2.0 over the last, almost decade has been all of these different companies. There's all these different SaaS companies out there that say, oh, we can aggregate your data and help you drive actionable insights and deliver actionable insights. But really all they're doing is just taking your data in one system and creating like a web-based dashboard for you. And it's, and there's nothing wrong with that, right? I mean, like that's basically, Tableau at a very high level, and that's a phenomenal company, now part of Salesforce. But we're sort of now, in my opinion, in like data, not phase 3 yet, but we're in like phase 2A, which is we need to go beyond dashboards here. And like corporate executives want basically the machine learning to do the modeling for them, so they can say, okay, 6 months from now, based on any number of variables, what should I do?
Right.
It's not just, let me look at a dashboard and have to figure it out myself. And then I don't even really know what to do until I've spent weeks or months or even years analyzing something that already happened. Right.
Right.
that's kind of how I think about Palantir. You've kind of hit on this. There's so many applications here in terms of industries. What industry excites you the most? Is it logistics or healthcare or transportation or whatever? I mean, financial services, crypto. I mean, it really, another reason I think it's just such a phenomenal company is it's industry agnostic, if you think about it.
That's the other thing. I mean, I thought of investing in Palantir as like, all right, I don't know what's going to happen in the next 10 years, but I know data and tech is going nowhere. In fact, it's exponentially growing. So could I put my money in a company that I believe in the leadership and I believe has a chance to dabble their fingers into every element of the economy and the world at one point? And Palantir ultimately was the best option in the market for that. The two industries I'm the most excited for is crypto and supply chain. So crypto is big because the world is becoming decentralized, and I don't think that matters that much in terms of like social media and stuff, but that matters a lot more in terms of finance and financial services and decentralized finance. And Visa and MasterCard, I don't think their days are numbered, but there's just a lot more easier solutions that are cryptographic that are going to require a fraud protection services, because users don't want to give up their data that much anymore to these financial services, which means these new financial cryptographic services are going to need to protect against fraud, because that's one of the biggest problems in crypto. And I think Palantir has the best data analytics software to be able to do that, or it is going to have one of the best simply because of the network effect of data that they have on their platform. And then supply chain. I mean, supply chain is big. Palantir just partnered with a company in South Korea, and they're basically building a shipyard manufacturing data analytics platform. So this company creates the biggest ships in the world, or they're the largest ship manufacturer in the world. And when you make a ship, there's a lot of stuff that goes into making a ship and then getting rid of a ship and to make new ships. So those supply chains that are required to be able to create those things are not as advanced and strong as they should be, and they can be a lot more efficient and productive. Palantir partnered with Skywise, which does supply chain in the airline industry. So I think logistics, especially in the macroeconomics with everything that's going on with the pandemic, are going to get disrupted a lot over the next 5-6 years. And organizations will have to integrate some centralized protocol to be able to make sense of how to know that they need a certain part, in July when it's low on demand in June. And,
Right.
and Palantir will be able to help on that.
Now, what do you think about when it comes to this idea of smart cities and, the transportations and logistics play into this, right? And, Palantir, they have an investment in Bird Technologies, which is the scooter company. I don't know if they have those scooters where you are, but I see them all over the city where I live.
Yep.
And I even read today that one of Apple's suppliers, I forget the name off the top of my head, but they're investing in a scooter company over either in Japan or Korea. And so I think to myself, this is kind of interesting because I've never used any of these scooters. And so I can't really, I don't see, I don't want to say that I don't see the benefits of them, but it's kind of interesting that these large corporations are investing, non-trivial amounts of money. And I have to think that it has something to do with the concept of a smart city, in the future. I don't know. Do you have any thoughts on that?
Well, this is the whole concept of Palantir's understanding of IoT, right? So IoT, for people that don't know, is the Internet of Things, and it's like Siri, your electric car, these devices that don't have to be connected to the internet in order to be able to give you recommendations. Like if I ask Siri something, or my electric vehicle to tell me to stop at a certain moment if I'm not looking at the car, right? It'll do it on its own. These IoT devices are powered through smart sensors, and these smart sensors are based through AI and machine learning simulations that power the sensors that give the device the ability to give a recommendation to the user. So when you talk about smart cities, I mean, that is a world in which we're going to be in terms of the everyone talks about infrastructure. The world in which infrastructure exists right now might be fundamentally different from 2030. It might actually look like those sci-fi movies that we see, where we have all these devices around doing everything and making our lives more efficient and more effective. You need artificial intelligence in that capacity, because those devices need to be as intelligent as humans so that humans don't have to do some of those things. Palantir makes a lot of these things that they call digital twins, which is basically taking an organization's data and making a digital replica of it that can actually give the organization better advice. So with scooters, with other IoT devices, with other forms of infrastructure, I think there's a lot of opportunity for Palantir to be a foundational element of a smart city for a town or government.
Definitely. That's a great point about the digital twins. And so, how do you think Palantir wins, right? I mean, this is there are so many companies of varying sizes that are trying to capitalize on, again, big data, AI, machine learning. And, for a while, those were kind of buzzwords, but I think we're now in the very early innings of some companies that have actually developed some really interesting and incredible technologies that actually can do these things. And yet we're still in the early innings. I mean, I would like to think that Palantir's technology is going to become even smarter over time, as they, invest more in R&D. But you've got Salesforce operating in this space. Obviously, the big behemoths like Amazon, Microsoft have more than enough capital to get involved if they wanted to. You've got Snowflake, which is more data warehouse, but their CEO has said that he has a vision to get that to a $10 billion revenue business. Right now, they're doing about $1 billion. So if they're going to increase tenfold, they're probably going to have to do some M&A, or at least get into other products other than, beyond data warehouse as a service. And so how does Palantir win, whether it's from direct threats or even tangential competitors?
Yeah, I mean, the thing about threats and competitors is, at least as of now, they truly have none, right? And Snowflake, Databricks, these are some of the competitors you mentioned. They're more data warehousing. They don't actually do what Foundry, which is Palantir's flagship software, truly does.
Right.
Karp just did a great interview. You could link that in the description as well. And he was explicitly asked about, Alex Karp is the CEO of Palantir. He was asked about, these competitors. And his argument was flat out simple. It didn't seem like he was BSing it. He was like, they don't do what we do. We have been creating this product and this software for the past 17 years. Our software is trusted by the highest forms of government, CIA, FBI, you name it. The things that we do and the way that we work with databases and data writ large, and the ontological relationship that they have with an organization is just fundamentally different than any other product that's out there in the market. And it's really influenced by Peter Thiel, who's one of the co-founders of Palantir's philosophy of building a company that is a monopoly, building something so different that the world doesn't know what you're building. And as a result, they shun it from their biases, because they're like, oh, screw that. That's a stupid product. We don't know what it is. And in the meantime, you're building something for the world that they don't even know they're going to use in 5 years, like AWS did. And as a result, you have no competition. Because if Google and Microsoft knew what AWS was actually going up there, they wouldn't have been late to the party. So I think, Palantir just has a product that's differentiated at its core, and they have such a competitive advantage that it's going to be hard for a Snowflake to catch up in exactly what they're doing. Now, the other argument you say is like, well, you've got big companies that can offer big threats. That's a very good point. There is no reason why Google, Microsoft, and Amazon can't enter this space and invest the money that it takes to build a competitor. The problem is that's not what they make their money off of. And this is a point that a lot of people forget about. When you're a public company, we just saw what happened to Netflix. They didn't even miss on subscribers. They just said, we're not going to get that many in 2022. Boom, $600 stock to $380. That's insane. Because at one point, as a public investor, you're like, all right, well, how much is this company going to grow? Netflix has been around for a while. How many more subscribers can they possibly get? So for Google, yeah, you could invest a couple, $10, $20 billion, which is what it's going to take to catch up to Palantir right now in terms of building a product that's even remotely similar. But you've got to optimize search. You've got to increase profit margins off, what the products that you're selling. Google Payments is their innovation. Google Payments has to work, right? Facebook advertising is their bread and butter. The metaverse, Amazon, you've got to sell more products. And otherwise, like, why am I investing in Amazon? People go to Amazon to sell stuff. So it's like they can invest in building a Palantir competitor, which I think they may do. But the bureaucracy of those organizations and the fact that they have a fiduciary commitment to public shareholders to produce growing results at a level that justifies the stock price going higher every year means that it's going to be very difficult for them to actually build something meaningfully compatible with Palantir.
Yeah, I mean, it's a great point, right? I mean, we see now that Google is trying to play catch up in the cloud, and they're trying to catch AWS. And I mean, they did about $5 billion in quarterly revenue in Q3, so it's a run rate $20 billion business. But guess what? It's not profitable. They're still losing money on that. And from AWS's perspective, not only are they on a $60 billion run rate, right? They're on a 50 or $60 billion run rate. The operating income from AWS, just from AWS, was higher than Amazon's total business. And so they're making so much money, and they're printing so much money from AWS. They can invest in other areas. Hence, they just did their largest acquisition, buying, MGM, getting into entertainment, because they just, that's what this financial flexibility allows you to do. And so I agree with you. I think Microsoft, Google, they could dabble in this space, but it's going to take tens of billions of dollars. And at some point, it becomes the buy versus build argument, right? And frankly, now that we've seen with Microsoft just acquiring Activision, or at least they're going to try to, who even really knows if this is an area they want to go in? It seems like they're really going all in on gaming. But maybe a different way to ask the question is, because I really want to hit this hard, is that you've got Palantir, which I tend to think is this incredibly robust product that only very technical people can understand. And so I personally think that it's this long sales cycle, very hard thing to sell, not because of its capabilities, but because you need to get buy-in from probably 10 different people at these different companies, and they
Yep.
all need to understand what this actually does. And it almost sounds like it's from 1,000 years into the future, right?
Right.
And so how do you explain that to someone? Whereas you have these other solutions, again, Databricks and Snowflake, that they're basically not only just like Palantir, they're out of the box and ready to go, but it's sort of like they're so easy to use. It's like playing a video game. Like you can
Right.
scale something like that across your organization like that. If I'm a huge organization and I have 80,000 employees and I need Palantir to be the backbone on which my data network relies, how do I get 80,000 people, sort of up and running and figure and working this tool, right? And I think I know what you're going to say, but again, this is more for the audience. So
So your
that's,
question is kind of how do they scale the product?
yeah.
Yeah, I mean, it's a very good question. Look, it's a really hard thing to do. Right now, if you get signed up with Palantir, it takes 6 months for their engineer, not 6 months, but it takes a decent amount of time, some weeks, for their engineer to come in, get the product set up, and then they're losing money. They're operating at a negative contribution margin at that time because they're paying for the fancy engineer to go set up this product, and they're not getting any revenue, right? So it takes a couple months ultimately for the organization to get the product within the infrastructure, and then ultimately decide that they want to have that corporate executive buy-in. But when they do that, Palantir's average contract is around $7 to $8 million per client. So it's a well worth payoff after they get you integrated with it. But to your point, it's a very technical product that they have to get people to understand and integrate it and convince them that it's a product that they need to have. So it's a hard thing to do. The way they scale ultimately, I think, is two ways. Number one, people that start using Palantir start to have a competitive advantage over their competitors. So for example, let's say Facebook integrates Palantir tomorrow, and Facebook's already better than like Twitter. But let's say Facebook gets 10,000 times better than Twitter, and Twitter execs find out, oh, it's because Facebook is going way faster and stronger because they have Palantir powering all their data analytics. Well, then Twitter's like, all right, let's check out Palantir. And I think that's going to happen throughout a lot of organizations because it's just human nature. Like you don't want your competitors to have software that's making them better and you not know about it. That means, if you don't innovate, you're going to die. And $8 million is not a lot of money to these organizations. Right. They have the money to spend on the product. They just need to know the value proposition on it. So I think once competitors use it, it's going to have a little bit of a snowball effect. The second way, though, and Karp talked about this, is modularizing the product, meaning Foundry is like this $8 million per year on average product. What if we can make it a $10,000 per month product and have a certain subsection of it to your organization? So for example, if you have a mom and pop restaurant and you're doing 20,000 a month in revenue, awesome. And you need to organize all your sales and marketing expenses, blah, blah. You need to do a ton of stuff. You need to make data-driven decisions on how to order certain food to have stuff in supply. You get, Foundry for restaurants, which is a $5,000 per month subscription that you can literally download in minutes and then put it in there. And then boom, Palantir gets 60,000 in revenue from a small restaurant. Stuff like that is what I think is going to get them to exponential scale. But I only think that happens when they infiltrate the enterprise, which is going to take a couple of years. And then if they can modularize the product, that's a chance where they can scale.
Absolutely. I love that. I love that. Totally agree. So, all right, I want to be cognizant of time here. So let's kind of get into, kind of current state of the markets. Obviously, it's very interesting right now. So, I mean, are you, kind of what's your outlook? What's your take? And are you buying right now?
Yeah, I'm looking at the market right now. It's so crazy, right? So Palantir is at 1282. Literally, right before I got on this call, it was at like 1306. And I was like, all right, we're done with the 12s. And then it just dropped right back to 1280. So it's just like it got to 1190 in the morning. Look, the markets are reacting right now to the fact that there is fears of a recession because the S&P 500 has not corrected in the past 19 months more than 10%. The S&P is starting to correct to 10%, which is healthy. Right. That's actually very healthy. It is unhealthy for the S&P to not correct 10%. Now, one thing that's important to note, and I said this on a video I did today, the S&P 500 has not corrected more than 27 times since World War II. So these opportunities don't come far and often where the S&P and the whole market, the NASDAQ, actually drops to a level where it's going to take 5-6 years for it to come back. But if you get that dip, when it comes back, you're going to have some substantial gains on the upside. So yeah, I think what's happening is very normal. Additionally, interest rates are rising, and if interest rates are rising, the whole government's or the whole market's going to get more scared of investing in specifically high growth tech companies because the cost of borrowing capital increases when interest rates rise, which means those companies aren't as valuable anymore theoretically. That's a factor. Then you've got algorithmic trading. Once you start panic selling, like retail investors, like I was, back in 2020, more algorithms recognize, oh, this stock is selling off 10,000 in 10,000 areas every minute. Let's sell it off even more in order to hedge our bets, which means that increases the selling pressure. And then on top of that, you've got some geopolitical problems with Russia and Ukraine that's happening right now, right? That's a lot of uncertainty. Additionally, it's a midterm year, and I did a video on how the midterms every single year, the market drops around 6 or 7% more than the third year after a midterm because markets are uncertain. And then on top of that, you've got inflation. So it's like this is a perfect tornado for the market to crash, and I believe it's a perfect opportunity to buy because none of these events are really going to be substantial 5 years from now.
Okay. So that kind of answers the follow-up. So you obviously have a very long-term mindset. You're not really, a trader.
Yeah, I'm buying the dip, if that's
you're buying the dip, and you're thinking 5 years in the. So
to get Palantir at $12 is so utterly ridiculous. To get Facebook at $290 is absolutely insane. And it doesn't seem like that when everything's going red. But if you know the market and you just look at one chart, which is that it goes up over time, you're like, oh, this is a pretty good deal. And everyone wants a good deal until it's time to get a good deal because you're so afraid of what the crowd is saying.
Exactly. Could not have said that better myself. I mean, look, you can't really. It's the whole, time in the market is better than timing the market. You can't really time a bottom, but a lot of these companies are trading their 52-week lows right now. So if it could go a lot lower. I'm not going to say that it won't, but you can't really go wrong buying at a 52-week low if you have conviction, right? I mean, could Palantir?
Well, that's the important part. You got to have conviction because you got to have the mental health to be like, I like Facebook. I think Facebook's going to be around 5 years. If you don't think Facebook is a company that can be around 10 years from now, then it's going to suck buying it at 280 because when it goes to 260, you're going to be like, oh, I'm going to sell it.
Yeah,
right?
Exactly. Then you're going to panic and get out. Okay. So, let's kind of wrap up here with one, sort of a fun question. What is one company that you're, kind of analyzing or you're interested in, but you don't have a position in it right now? You don't have any position, but you're considering taking one, and maybe talk about why.
So I'll give you. I got a bunch on my mind. I think the one that I'm the most interested in, probably DNA, Ginkgo Bioworks. It's trading at $4.88 right now. All-time highs were at $15.86. Big in Kathy's ARK Innovation Fund. They I don't know a lot about them, but I know that they're playing a major role in the genomics revolution. And it's off the top of my head, what I've heard Kathy say about it is diseases are going to be solved eventually. Our kids or kids that are born in 2070, they're not going to have to deal with a lot of the problems that we've dealt with from a biological perspective. Just like if you were born in the 1830s and the average living age was 50, that's not the case anymore because we have so much more science. So exponentially, diseases are going to start to get solved because all of the research and innovation that's going in, and artificial intelligence plays a big role there as well. DNA, that's the ticker symbol, Ginkgo Bioworks, is at the forefront of building the infrastructure for how we understand genomics. And they're doing a lot of special stuff with our DNA. Again, I don't know too much about them, but it's an interesting company. And for $4.88 when it was trading at an all-time high at 15, that's a 300% return if it just gets back to all-time highs, which it had last month or 2 months ago. So that's one that I think people should check out.
That's interesting because, I think I saw on Twitter, you listened to the All In podcast with Chamath Palihapitiya. So I'm a huge, I've been following Chamath for, since I was in college. So over a decade ago. And I don't know if you ever caught this or, if you just recently started listening to it, but he was talking about a sort of, he referenced an investment that he passed on once. And it had to do with kind of the space that Ginkgo operates in. And
I remember the episode you're talking about.
Yeah. One of the other, besties that was on there said, was it Ginkgo Bioworks? And then obviously he said, well, I'm not telling, I can't say. And they kind of bleeped it out. But ever since then, I've always wondered, scratched my head. I wonder if that was the company, but I do agree with you. At least what they're trying to solve, very interesting. And I do think, some of these diseases that we have today will go away, and that will be through a lot of R&D and powerful science. And Kathy Wood, gigantic position. I honestly, I love her. I listen to a lot of what she says, and so I know
She's
her
a smart
funds
woman, man. She's smarter
very
than a
smart,
lot of
very
Wall Street.
smart.
Smarter than a lot of Wall Street.
I don't really care for the Twitter dunking of people saying, oh, her funds are down and value investing is back. I mean, to each their own. There's nothing wrong with value investing. There's nothing wrong with growth investing, and most of the companies that she has huge positions in are either money losing businesses that could be very lucrative 10 years from now, or they're maybe profitable now, but it's not even close to what they could turn into over the next decade. And so it's just a different mindset.
It's
And
also,
so
if you believe that tech and I hate to use the word innovation because it's so cliche, but if you believe that
right,
these companies are innovating and they're not going away, then like it starts to make sense, her thesis around this concept that they're in a deep value territory position where you're getting
exactly.
these prices at ridiculous discounts. And if you actually listen to her talk, and I've listened to her for 40 minutes straight on what's going on with inflation, you start to, and she's been around since 1980. She's been doing this for a long time. She
Yeah,
understands the macro economy. So when she says, hey, me and my team are doing research and we do think inflation is transitory, here's all the numbers that no one wants to talk about because everyone's afraid. You're like, well, wait a second. If these numbers are true, then if I give it some time, she might end up being right. And if she does end up being right, there's a lot of money to be made using her philosophy, So it's a bet, but we'll see if she's right.
definitely. Couldn't agree more. Well, look, I really appreciate you taking the time today. I had a blast. I can't believe 30 minutes already went by, and I know you got that meeting, so I won't take up more of your time. But everybody, this was Amit from Amit Investing. Like I said, I'll put his Twitter handle and link to his YouTube channel in the description. Definitely give him a shout out. Check him out. And I really appreciate your time today and enjoyed talking to you, man. Have a good week.
Thank you so much, Adam. I appreciate it. Thanks for having me on.
Peace.
Bye.